Uh, Thanks everyone. Good morning. Uh, I am I audible? I can just
Yes, sir, you are audible.
yeah. Thanks, Gopi. Yeah. Uh, so this week we'll be delving into the topic of large caps. So as you know, we manage a large cap fund called TruBlu. So during the course of the next 30-40 minutes, we will understand how the portfolio construction goes into managing the large cap portfolio. And to set the context, we'll start up with the current market valuations. Where does the market segments trade in terms of large caps and mid caps, small caps? What's the current valuations? And we'll also look at sector-wise how the valuation trends are currently playing out. Then in the second part, we will delve into the portfolio construction part of the TrueBlue. Uh, and third, we'll have the Q&A. So that's broadly the agenda for the webinar. So getting into the first part, so as you all know, so last since market peaking out in September, we have seen a correction across the all the market segments. So post this around 13% correction in the large caps, and the equivalent amount of not equivalent, I think around 4 to 5% higher correction, so almost a 19% correction in the mid and small. Where does the valuation trades now? You can see clearly that the Nifty 50, predominantly the large caps, current 1 year forward price to earnings is around 19 times. So it's trading below the last 10 years of average. On the other hand, if you look at the mid and small, still post the recent correction also, they still continue to trade a premium to the last 10 years average. So this is where, as a house, for the last few months, I think most of the discussion has been, or focus has been towards large caps. Uh, so the decision has been most tilted towards the valuation landscape. So that's where. So in terms of premium, so as I mentioned, the mid and small currently traded at around a 30% premium to their 10-year average. Getting into the sector level valuations landscape, here you can see that a couple of sectors like auto and FMCG have been trading relatively below their long-term average. Even private banks could be another sector where it's trading below their long-term period average. So these are a couple of sectors where so the main idea of showing the data is that how in the subsequent slide, you will see that how our large cap portfolio has been overweight on these sectors. Uh, so capital goods, despite the correction also, I think they still continue to trade almost a 10-12% premium to their long-term average. So we have seen where the market segments currently value. If you want to compare the valuation of mid cap versus Nifty, the premium of mid cap over Nifty 50 continues to be still there. So these were the from the purely from the valuations context, it makes sense to have a tilt towards large cap at the current market scenario. So with the market scenario being discussed, so we will delve into the why we prefer large caps and what exactly large caps means, right? So the AMFI, right, the Association of Mutual Funds. So AMFI releases the market cap classification every 6 months. So on a 6-month basis, AMFI segregates the stocks based on the market capitalization and It gives us the list of stocks, like top 100 stocks, uh, what which classifies as the large cap, and what is the cutoff criteria, cutoff market cap. So as of last update in Jan, so currently the top 100 companies, uh, which are like more than a lakh crore market cap. So that will be the classified as the large cap stocks. So large caps probably mean that any company which should have market cap of more than a lakh crore. Subsequently, the next uh, on the mid and small caps will follow subsequently. So our focus will be on this market segment. So in this context, if you want to look at how the our large cap portfolio is being constructed, it predominantly follows basically four pillars. So initial focus and the foundation is the portfolio construction. So within large caps, so many might be seeing that large caps, it's very easy to understand and it's not very complex to build a portfolio. But even within large caps, we have a lot of sectors which are very cyclical, and it has to be approached from the valuation angle. And so in that way, in terms of position sizing and how actively the portfolio is managed. So everything comes under the portfolio construction part. This is where the TruBlu excels in terms of allocating the according to the valuations across sectors. So having a overweight, underweight, and that's what decides how the fund outperforms the benchmark. So this is the first pillar in terms of uh, the fund management. The second one will be the quality. Of course, uh, uh, being predominantly the universe is the Nifty 50. Uh, the quality parameters can't be taken for granted because even Nifty 50, you have seen that the kind of churn that has happened over the last 2 decades or so. If you see, many companies have come in, has gone out. So even among the top 50 companies, one has to be very conscious of assessing the quality of the business, the quality of the management, and the relevancy of the business in the current economic scenario. Because we have seen a lot of new emerging companies which are getting added to the index. So with the frequent operation, I think one has to be also aware of that the quality never stays stable, so it keeps changing. So portfolio also be uh, have to be conscious in terms of maintaining the quality. Third is profitability, and fourth is growth. So large caps traditionally have a the investor mindset that their growth levels are not uh, in line, or they expect from the mid cap and small cap, and they are, but we have seen that over the last 2 decades, if I've taken the earnings CAGR, I think mostly the large caps have grown in line or uh, slightly in line with the other segments of the market. And profitability, there is no question on profitability because all these companies are market leaders in their own sectors. So in terms of how they'll be better prepared to face any adverse cycles, because having a strong balance sheet, having a scale in terms of business. So uh, from a profitability angle, they are much more better placed than the mid and small. That's because of having a good cash flow creation and the balance sheet strength that they have. And along with that, because the ability of these companies to come out of the cycle at a very good phase, I think the growth automatically adds up during that phase. So this is where uh, the focus or the four pillars of how the large cap fund that is being managed. So next, we will look at how TrueBlue differs from the other large cap funds out there, and what we say as a USP of the fund. So it's a 100% large cap. Um, so our universe is Nifty 50. So within all the funds, all the stocks will be from the Nifty 50 only, and the fund will have a high active share. So active share, we will discuss all these points one by one in the subsequent slides. Uh, and then it's a buy and hold strategy and low churn. Uh, then the last one will be the fees. So it also offers an option for a zero fixed fees. So delving into each and individual points, first on the large caps. So currently the fund has close to around 25 stocks, and completely all of them from the Nifty 50 side. And you might wonder it's like just 25 stocks out there out of the 4,000 odd stocks in the market. But if you compare the profitability or the profits generated by these 25 stocks, you can see that 25 stocks, what we have in the fund, as a proportion to the BSE 500. So the in terms of number of stocks, it looks like just 5%. But the kind of profits that these 25 stocks generate is almost one third of the entire BSE 500. So that's what I'm saying. Like, it's like because of these companies having being market leaders and things like that, the profitability is not an issue. And with the current economic scenario globally and in domestic, the kind of challenges on the consumption side, the kind of challenges that we are facing on the export side with the new tariffs and a lot of regime changes, uh, large caps can withstand this kind of adverse economic scenario, and they can come out very strongly. So this is where these are as of the trailing 12 months. If you've taken the last FY24, right, it will be like 25%. So from 25% of the BSE 500 profit, that 25 stocks that we have in the portfolio has moved up to 33%. So it shows that the large caps have been gaining share of the entire profit pool, what we call it in the market language. So this is not just some small 25 or small companies, but this is like one third of the entire BSE 500 market. So what we are discussing in terms of profits. So next, so this is one data that we track, right? So like how the fund differs from the other large cap mutual funds available out there. So how much of the portfolio is different from these large cap funds? So as of last month, so 34% and almost more than 30% of the portfolio is of the TruBlu is different from the top two large cap funds out there. So this shows that the active kind of management that we have following it in the TruBlu, and it reflects in the performance also. So we look at in the subsequent slides. So this is the most important slide, I think, because this is what brings about the performance changes. So first on the weightage buckets. So out of 25 stocks, here you can see that almost two stocks, or we have like more than 10% position in them, and four stocks are in the 5 to 10% bracket. So you can see that almost six stocks, we have like a strong high single digits or double digit position. If you want to take comparable Nifty 50, I think you might not find this kind of active allocation in the index. And we have a solid like almost all stocks in the 0 to 3% range. And the weightage decides mostly based on the next 3 years, what's the earning growth that the company can provide, and what's the current valuation. So both the earnings growth and the current valuation decides what kind of weightage that the stock will be placed in the fund. So that's a stock weightage bucket, and it shows how actively the portfolio is being built. And in terms of stocks, I think we are disclosing the top 10 stocks in our fact sheets also every month. So currently, as of Feb, these are the top 10 stocks with the top two or almost like the top three from the private banking space. So as discussed in the previous slide, right, within the sectors, one sector which has been trading below the long-term period average in terms of price to book multiple has been the private sector banks. And so these banks have withstood the current volatile markets also. So that gives you context in terms of how the portfolio could withstand in the current volatile times. And uh, so almost you can see that uh, within the financials, so banking and also financials. So financials, which include the life insurance companies, put together forms the largest part of the fund. So this is how the fund has been constructed now. Uh, so any question we can take it at the end. And, moving to the how the fund is managed from the sector perspective. So here, as I mentioned earlier, you can see that we are big time overweight on the financial services, which includes private banks and life insurance companies. So you can see that the TruBlue's weight is close to around 45%, while the Nifty weight is 34%. So almost a 10% overweight on the index. So this overweight, obviously we are underweight on a couple of other sectors like oil and gas and then IT. Almost we have underweight on the both the sectors by close to around 7% underweight. While other overweight is wherever, like I discussed in the previous slide, where the valuations offers comfort, right? On the consumption side, especially, so True Blue, we have like a 5% overweight on the index, along with auto also equivalent of around 5% overweight. Uh, this just if you want to compare this slide with the valuation without what we spoke in the initial couple of slides, you can clearly see that the valuation bent that we have in terms of constructing the portfolio. And we have, in terms of active management, you can clearly see that a lot of sectors we don't have even any present in the True Blue. So if you don't find any value or the earnings growth, I think we won't be there, and we are willing to take a 0% position in those stocks or sectors where either it may be due to the earnings growth that we don't expect, or on the context of volatility. So that's where uh, the positions sizing and also the sector level overweight, underweight comes. Yeah, so move to the next slide. So next, the third USP has been the low churn. So as you can see, over the last 4 years, right? I think except for the calendar year 23, so uh, because we are actively managing the fund, when the market offers an opportunity, we would like to move. But over the last 4 years, if you can see, just for except for 1 year, our churn has been below 10%. So this shows that if you take an average, then it will be like we'll be holding the position for like almost 6 to 7 years on an average. But yeah, so this is uh, shows that the churn or the stocks that we buy, I think we try to uh, research, and then we try to see that on a quarterly or yearly basis how they are performing. And most of the times there is no major reaction being taken, because a lot of research activities goes before initiating a stock, gets into the portfolio. So that makes sure that the churn remains low within the portfolio. Lastly, on the risk management, this is drawdown of the fund with the Nifty 50. You can see that this is in the recent space. We haven't seen deep drawdown except for now. If you see last drawdown, which happened in 2022 June, July time period, here you can see that just highlight it. So here you can see that during the last correction, when the Nifty corrected close to around 18-19%, the fund corrected only around 11-12%. So similarly, in every correction, so uh, the fund's volatility remains lower than the index. So even the current market context also, the it is being maintained, because it is just an outcome of uh, what's the portfolio construction happens. So this is just an outcome, because where the uh, in terms of sector level allocations, in terms of stock level allocations, so that helps in keeping the portfolio having a lower drawdown than the index. Obviously, the beta is just 0.75 versus the Nifty 50. So that's what is reflecting in the drawdown chart also. Um, as many of you know, last 3-6 months has been quite volatile, and which has not been the case post COVID. So post COVID, we have seen a one way run up with a minor volatility in 2022, etc. But as we get into a phase of high volatility, our expectation is that with a good portfolio construction and having a proper risk management in place, the fund could withstand this volatility and outperform the peers. So as you can see in the last 1, 3, 6 months, so this short term just to performance is just to showcase how the fund would withstand volatile times. So we always look at the performance on a 3-year rolling basis. So this data is just to showcase how the fund has performed in these volatile times. So you can see that on a 6-month basis, the fund is almost just down to 0.7%. While among the other large cap mutual funds out there, you can see the corrections has been as high as close to 6-7%. Things like so. Yeah. Next, so we have seen how the large cap fund has been constructed and how we manage the risk and etc. So couple of so just to get into the stock level and how we see the how we analyze the large caps. So we have a couple of examples that we have in the portfolio. So the first one will be the HDFC Bank. So this data it's a very interesting data to analyze how the bank has been a good execution company from the profitability angle. So you can see that as of Q2 FY24 last quarter, right? I think the 1 quarter profit was almost equal to the entire earnings of the FY18. And so this is not the first time. So and subsequent every year, I think the bank continues to scale up and profitability continues to inch up. So the uh, executing on ground and having a consistency in earnings is what helps in having uh, creating a large cap portfolio with low volatility, the beta that comes in. So earnings plays a key role in that. And so second one, another example from a portfolio could be ITC, where uh, so this was not a market favorite during the 21-22 period, where because of a lot of reasons, because of COVID, there was some issues and things like that. So, but the valuation was very attractive at this point, and so, but the financial performance was almost in line in what was the expectation. So it was not any company that was degrowing in its core business and things like that. Slowly, as the COVID issues and all those things got over, I think market got recognizing its undervaluation, and we have seen the kind of run up during the FI 23 particularly. And so this chart shows that uh, financial performance or the earnings growth is what we track, while at the end of the day, market recognizes after a lag. But earnings growth having a good visibility over the next 2-3 years, and what kind of valuation. So these are the two key factors that drives in terms of having a getting the stock into the portfolio. These are a couple of examples to showcase. And if you look at the financial metrics of ITC, so we have this we track the growth or the earnings growth not on a, we track it on a CAGR basis also, but CAGR is a point to point metric, but you also track it on a rolling basis. So on a 3-year rolling basis, on a 6-year rolling basis, even on a 3-year rolling basis, we just try to analyze the company's metrics and see that how they have performed, right? So suppose, for example, if you see the free cash flow for the company, I think it has been gradually in the upward trend. So we just try to see the metrics in a different point of view to get a different perspective from the market. So only way the alpha can be generated is that your perspective has to be different and you have to be right. Obviously, the how we can be right depends upon the fundamental performance of the company at the end of the day. So these are a couple of examples how the stocks are being analyzed. So coming to the last part, in terms of return expectations, so what's the expectation that we endeavor to from the portfolio is that 200, 300 basis point over the benchmark. And this has to be looked in the context of 3-year rolling period. So that's where the return expectations are being set. And this is on a risk adjusted basis. And so, so as we discussed, all these businesses are very highly profitable and they're already got global level scales. And so in terms of withstanding the current tariff environment, I think these guys uh, have enough. I think they will be getting a lot of new opportunities also in terms of acquiring new companies, getting more scale. So a lot of interesting times for the large caps. And uh, of course, all these business level actions delve into the long-term wealth creation of the. So in terms of suitability of the product, so this will be much better for the first-time investors or for the big investors like family office and institutions. So the kind of because the kind of stocks that goes into with low beta and low volatility, and so we expect these clients to have the much better uh, time with this product. Yeah, so this just so lastly on the performance side, so as you can see on a 3-year basis, what we look at generally on a 3-year rolling basis or a 3-year CAGR. So you can see that almost 200 basis point of performance for the benchmark. Yeah, so that's we are almost end of the presentation, and we can just have a if you have any questions, you can have the Q&A. You can just post it in the Q&A box, or you can just raise up your hand. I can just unmute you. Okay, I think we have a couple of questions. Um, Starting up with the Sam, yes, asked, yes, we have L&T in the portfolio. So L&T is actually it's classified in the construction sector. So that's why it doesn't come under the capital goods. And yes, that's on the question. Cost structure, maybe I can share the slide. Let me just. Yeah, so if you can see here, so you have couple of options. So I think one of you asked about the fixed fee. So how the fixed fee option work is that the zero fixed fee is that you don't have any fixed fees. So it will be purely the performance oriented. So there is a hurdle of 6%. And so anything the returns over and above 6%, the sharing of performance fee will be 20%. So 20% of profit share over the hurdle rate of 6%. So that's how the uh, performance fee works. I'll just unmute Vignesh. Yes, Vignesh, I think you're unmuted.
Yeah. Do we have rolling return details for large cap, mid cap, small cap?
At present, in the slide, I don't have. So you want like the Nifty 50, how the rolling returns has been there?
Yeah, yes, at least Nifty 50.
At present, maybe you can just contact RM, let me know. I'll just share you personally like.
Oh, okay, thank you. Okay, is this TruBlu only for PMS or it will come under M2W?
No, TruBlu, it's a PMS fund.
Oh, okay, thank you.
Thank you. Yes, case, I've just unmuted you, please. Okay, I'll just take the questions from the. So in terms of AUM, currently AUM is close to around 70 odd crores. So in terms of fees, so like in terms of operational things, you can just get in touch with our RM in terms of how operationally the fees will be charged. But like I mentioned, shared in the slide, I think you can see you have two options. In terms of operation level, you can just have a word with the relationship manager. Is this another question? Is one of the top performer in yours? Then, so you want to compare the funds, the other PMS funds that we have in terms of either the multi-asset funds, pure or a small cap or a flexi cap. So the TruBlu is a different context. So each and every fund is in a different context. So depending on the investors' own risk appetite and what kind of goal that is looking to achieve in terms of investing in the fund, then so its risk appetite will be assessed and then the suitability of fund decides. So it depends upon the individual's risking ability and not each and every fund that we have is quite different. So comparing a small cap fund with a large cap fund and even the market context also will differ. So in I think one particular point of view, the small cap will be outperforming, but in one different time period, large caps. So the individual's time period, what is his risk appetite, will be the key factors in deciding which fund suits, rather than comparing the funds that we have. So that could be the answer to you, Raja, I think. So another question. So SKS, I don't know the full name, but so individual stock level, think we don't want to discuss because so how the portfolio constructions, either be a personal level or a fund level, what we could be suggesting is that any portfolio, any decision should be looked at the portfolio level. So like how in TruBlu we manage within the large caps, we have quite a lot of active positions versus the benchmark, and the overweight, underweight, both at the stock level, both at the sector level, the risk management. So all these small things that goes into managing the portfolio. So that could be the answer I could give you, because if you Sam, another question is that can we switch to another PMS one? Yes, I think uh, once what we could suggest is that this switching uh, or so once before investing, I think you should be prepared to at least for a 3 year, 3 to 5 years viewpoint, because the frequent or short-term switching won't help in long-term wealth creation. So before getting into the portfolio itself, I think uh, our relationship managers, I think they will guide you in terms of what suits you and how the portfolio should be maintained over the period of time. Uh, so yes, you can switch if required. There is no issue on that. Yes. Another question from Vivek. What is the buying criteria for stock? Is it value or growth? Are you using basic screeners? No. So the so any stock, uh, we first initially so for TruBlu, the universe is Nifty 50. So within the Nifty 50 stocks, uh, there is no restriction that we have a value or growth. So it's a blend of both only. So at the end of the day, it's just being value. No earnings growth won't add value unless we buy it at a very cheap valuation, right? So it's a blend of both value and growth, and we try to so it's not just initial buying. So post buying on a quarterly basis, on a half-yearly basis. So we manage the portfolio in terms of having what kind of allocation the individual stock deserves. So you can see that the top three positions, I think it's like top two position in double digits in terms of position sizing, and if you take the top 10 stocks and analyze over the last 3 4 years, it won't be like in the same similar weightage. So the active allocation goes into that. It's not just basic screeners like forward PEPS. The quality of business in terms of how they are shaping up, in terms of quality and quantity. In terms of quality, and discuss in terms of whether the balance sheet, how the balance sheet is shaping up, how the cash flow generation and earnings growth. So P&L is just one part. So on a holistic perspective, we take a view on the balance sheet, cash flow, quality of business, and things like that. And all these things adds up and then decides what's weightage at the stock to have in the portfolio. Yeah. So one more question from Vivek. I think RA meaning research analyst. What is the role? So from the research analyst, the typical buy side role is what we follow. So there is nothing different from any buy side research analyst role.
Is iThought providing fee-only plan mutual fund advisement or only through M2W?
Vignesh, I think for the M2W or MFD, it would be great. Can touch base with the MFD side. So this is only on the PMS side.
Okay, that okay. Is iThought providing kind of fee-only based service for direct mutual fund? I was not giving that thing.
And that's what. So maybe I will just have a word with the relationship manager who takes care of the MFD side. So what you are asking is on the MFD side.
Oh, okay.
Right. So this is on the PMS side. Because they
Oh.
will give you a much better perspective on what are the operational pieces that you're asking.
Okay, I'll check. Thank you.
Yeah. Maybe I can post the webinar. I can ask any RM on the MFD types to contact you.
Okay.
Yeah. One question from KV Ramani. What your past 5-year performance? So the performance slide I'll just share if you want again. So this has been our performance since inception. So the inception of TruBlu large cap was in March 2021. So it's been like we are just inching close to 4 years of having the fund. Vivek, 1% AUM fixed fees means yes, it's on an annual basis. Yeah. So for those, if you have any further questions, you can just you can note down this either mail IDs or the contact numbers. I just leave it shared. Another question from Bala on KV Ramani, dividends are reinvested. Yes, yeah. And one more question from Balaji is if someone has to plan the withdrawal of funds after 3-5 years, how does it need to be planned and what? So after 3 to 5 years, I think there is no restriction on any withdrawals or any locking period. So it can be planned accordingly, like what kind of allocation you want to withdraw. So there are no charges after 3-5 years. No, there are no charges. Great. So I think most of you. So if you have any further questions, you can reach out to these contact IDs. And thanks everyone for joining us today to just to get a view on the large cap side. Yeah. Thank you. Bye. Thank you.